Hey everybody, Dave here, and I want to introduce this new series or segment or whatever you want to call it, Stock Tip Tuesday. Basically, I just want to make a 3-minute or shorter video and just get these basic tips out, and it could be anything related to stocks. So today's tip is basically just going to be on share price and kind of just go over that, because I know there's some misconception out there from some newbie traders basically thinking that an expensive stock is expensive because of the share price. So today I just want to go over 2 quick stocks and just to show the relevancy here of what I'm talking about. So let's go ahead and get started. So the 2 stocks I'm going to compare today are Booking Holdings Incorporated, which basically is Priceline, and MDLZ. Okay, so one is $54.43 here. That's MDLZ. Okay, and that's not in the same sector as Booking or Priceline was, right? That's a $1,900 stock. Okay, so first glance at that, you're going to think, wow, Booking Holdings or Priceline or whatever you want to call it. Wow, Booking Holdings is that company must be doing very well. That price, the stock price is $1,900 a share. They must make a ton of money. They must, know what they're doing, right? So when you dig down deeper here, they basically have an income of $4 billion, all right? Their PE, or price to earnings ratio, is 21.49, and the shares outstanding is 43.73 or 72. All right, now when you compare that to MDLZ, their income is slightly less, right? 3.67. Their PE is roughly about the same, but look how many shares are outstanding. 1.47 billion shares are outstanding, okay? And they have roughly about the same market cap, okay? But look at this, it's $54 a share. So you'd probably look at that and say, wow, this company can go up, this price of this stock is basically a good deal. And when relative, they're basically the same, all right? Now they make, Booking makes a little bit more money, but I didn't dig deep into these. I just want to really go over real quick here, that when you look at Booking, you think that's $1,900, you're like, okay, that's way overpriced. I can't buy that. I don't want to buy that. Why would I buy that, right? When they're relatively exactly the same, okay? Granted, Booking is probably the better deal here just because of the forward PE, but the only thing that really matters when it comes to share price really is whether or not it pays a dividend, because that is based on how many shares you own. So, if Booking Holdings paid a 2% dividend like this one does here, then you can only probably own 1 share, right? If you only had $2,000, right? So you can own a lot more shares of MDLZ with $2,000. You're going to get paid more in dividends, okay? But other than that, it really does not make a difference on share price. If it goes up 5%, you still make 5% whether you own 1 share of Booking or, $2,000 worth of Booking or $2,000 worth of MDLZ. You're still going to, if it goes up 5%, you're still going to make the same amount. So the only thing that really makes a difference on share price really is whether or not it pays a dividend, because that is based on the number of shares. Okay, so just for instance here, if you took 1.47 billion shares and you times it by $1,900 a share, you're going to come out to a market cap of $2.7 trillion. That's how much MDLZ would be worth if it had a share price of $1,900. All right, so I've already gone over my 3 minutes, but I had to introduce this series, so going forward I'll try to keep them a little bit shorter. So anyways, if you have any questions, go ahead and leave a comment below, and we'll see you in the next video. Thanks for watching.